Hello, 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 everyone. How is everyone doing today? Double turnaround Tuesday. Is anybody tired? Does anybody get exhausted from the trading day? Wow. Oof. Again, part two. The instability continues. Doesn't mean we have to capitulate or as a crash, but it's just not right. It's just not right so far. We have a sideways correction. I don't know if we do have a significant down move. I do not know what the event will be that triggers it. Generally, you can't predict that. It's just something that then triggers a cascading event. Wish Christoph. Oh, hey Christoph. Since you're reading the book, you understand cascading events, and all it takes is one grain of sand to trigger it, and you don't know which grain of sand that's going to be. It's literally what's going on now, potentially. So I am on edge, knowing where the stops are for anything still long. Very cautious mode. And I don't get to this mode. I'm generally a cautious person, trading reward to risk and probabilities, but I don't get to super sit on my edge of my chair very often. And this is sit on edge of chair mode in the markets. So, welcome. Welcome, Davey. Hello, Josh. Good afternoon, Patrick. Hey, Chris. And I'm not trying to alarm anybody. I just want people, especially newer people who might tune into this. This is not the point to just start buying up stuff and just walk away. And yeah, if you're going to go long, know where your stops are and get them in there, and at least get emergency stops in there. Hey, Gary. Because there's stops I use on a closing basis, which are not put in the market. And then there's what I call catastrophic stops. Catastrophic stops are okay. Let's say I'm away from my computer and we just go into pure meltdown mode. I want out. What a nail biter. Yeah, it feels like walking on eggshells. Don't think Bob will be on today. I texted him a while ago. He's, remember, in Naples, Florida. And if you look on the map with what is already hitting with the outer bands, Naples is now technically in the hurricane zone. And already they were putting up they're trying to hold off, but I know when I texted with them earlier, they were putting up their hurricane shutters because the path went a little south. So if he pops on, he pops on, but I'm not expecting him to pop on. And I didn't hear back from him in the last text. So keep that in mind. That 370 is really big resistance. So, yeah, slow bleed. So far, it's just a sideways correction, just slightly down. Slightly down. Hey, Christoph. Hey, Amit. Waiting on a Bear Stearns or a Lehman Brothers. Powell has sure tried to tip it over. I don't think they're intentionally trying to tip it over. I'm trying to let them know the markets they're not going to have the major put, and they're not just going to pause or cut rates. That's just getting hammered home. Besides Evans, who was a little dovish, still in the hawkish camp, but dovish on that aspect. Everything else is just hammering it home. They've only, excuse me, there's only been like 14 rigs in the Gulf that have been evacuated. So no, I wait till a buy signal. And I don't have China's really dragging, excuse me, China's really dragging on stuff. So that's where we sit. There is no magic Bob button today, Coco. Overnight trading will be interesting. Yes. Well, overnight trading for the U.S. is just day session, for Europe and Asia and stuff. Just with the yen going back up there, with the bonds in Great Britain. Check out the Great Britain bond market. Oh, geez. That's why I'm saying I don't know what the tipping point could be, or if there doesn't have to be a tipping point. Remember, it's sort of like you have a really dry forest from drought conditions that is filled with a lot of underbrush. Yeah, and maybe there's storms coming through. Does there have to be a forest fire that started? No, but a random lightning strike could set the whole thing going. So we could have a random. We're in the conditions where a random lightning strike could ignite something bigger. What was going even long term stuff is starting to feel a little more pressure. I can tell you Bob isn't around. He hasn't tweeted today. He was around earlier, but when you got hurricane or tropical storm winds spiking up to hurricane winds, you're worried about other things. We'll get into what's going on. No, I just got to find me a text back. Let's just see. Hold on. No, not to helping neighbors. He's now helping his neighbors in the hurricane situation. So no Bob today, officially. Today, by the way, consumer confidence still coming in higher than forecast. We had new home sales were actually a surprise to the upside. Richmond manufacturing index is back to flat. Services index back to flat from the negative before. Dallas Fed services improving but still negative, and revenues, Dallas Fed services revenues index still declining. We still have another Fed speaky today daily, and then tomorrow we got Bostic speaking before the open, Bullard speaking after the open, Powell speaking after the open. I really don't know what they can say unless it's something that gives the market sort of a dovish tinge, but they have not come out that way so far. So then we got the EIA numbers, and then we got Bowman speaking at 10 and Evans again speaking at 1. So something can still be said that really roils the markets, which just go, and with the market on eggshells, it's why I'm in just super, super cautious mode. If we get downside momentum, I got to go with it. Yeah, I have a red thumbnail on this, but pretty, mixed. You had some buying it with the mega caps going into the close. I don't know. You still got Tesla it's insane with the buying there. Overall, this was not a strong day. Apple trying to hold up stuff a bit, but mixed. Tesla trying to hold stuff up. I don't know what Tesla's being bought for. Twitter's going to be interesting too. I mean, Elon's going to get his butt handed to him with the Twitter purchase. 58%. This is dropping. Remember, for the 75 basis point. So between the Fed speak and the data coming out, this is dropping, but still above 50%. But we're still a long way off. It's more, to me, it's looking like 50, 25, 25 going into year end. Remember, or sorry, 50, 50, I shouldn't say 50, 25, 25. 50, I was still thinking of last month, 50, 50 with the rate hikes, or it's going to be 75, 25. We're just going to have to see. Still a negative gamma. Fear and greed, still an extreme fear. So, which that can go lower, by the way. I didn't really glance at it. I was going to look at BlackBerry, but didn't get around to it. Been very busy with a lot of stuff. Tomorrow before the open, not a lot that I'm looking at. So that's where it sits. I just put that up for the point of completeness. For short-term treasuries, I like to go in right before the auction date generally, but you know what? again, on short-term treasuries, if it sways a little bit each way, it doesn't really matter to me. I'm not that worried about it. If you're worried about a like a tenth of 10 basis points or something on a short-term treasury, I'm not. It's not going to make a difference. No, there's no hurricanes in Chicago, Coco. We occasionally get remnants just to come up from the Gulf. That's about it, but no, no. We give other problems in Chicago. Please share the ticker of the UK bond yields. I have them on my other trading. I don't know what they are on here. I'll have to see what they are on here. You can look at the UK gilts. I don't think even subscribe to the data on here. But look up the gilts, anything gilt related. You can look up some of these funds, like the 1 to 5 year. You can just virtually see it, just even with the funds. Look at that. I don't know. I'd have to look up what they are on TradingView. If anybody has that handy and can look, well, I don't want to take up everybody's on the live stream, but you're going to want to look at the gilts. But if this gives you an example, if that gives you an example just with the 1 to 5 year gilts, look at that. That's not a stable move. If you're wondering, you know. And it's trying to put in it's still holding, by the way. This is a great area still watch for with your single bar harmonics from this sell-off bar. It's really good to use single bar harmonics on these kind of bars. And again, I've put this out before. I occasionally throw out little tidbits. Only use it on bars that are at least 1.5 short-term ATR. But you see how it's holding right at this 50%. Your key line, the stands at 62.5. If we get a close below that 62.5, watch out. That could get interesting with the pound sterling again. Was going to ask Bob, but what does this mean? Chinese banks set to revive cyclical factor in yuan midpoint fixing formula. Revive counter-cyclical. I have no idea. I'd have to research that. Again, you asked me about what goes into a calculation for technical trading. I can answer that more than I can without researching review to figure out the counter-cyclical factor in yen midpoint fixing formula. I do not know that off the top of my head. So, by the way, you do have a little divergence here on the S&P. The S&P, as I said at lunchtime, retesting the June lows. That retest is complete. Yes, aggressive buy on a close above today's high. Before that pattern, there's nothing even. I'm not going to drop below the 1 hour going into a overnight session. Yes, there's potentially still a little mini double on a sloppy 15-minute that can be played out. But that's going to be done way before. On a higher time frame, there is nothing. I am, though, watching. If we do get past the midpoint of this horizontal channel, since we did break down and didn't get a flush down move, if we start getting above there, I will start watching for the return to the other side of the channel and a potential breakout, because if people got short and then it goes the other way, that is technically a shake and bake play. All right, so that's what I'm watching for. Which, interesting enough, you get that shake and bake play. Not saying that has to happen, because we could wake up tomorrow, or we'll all have alerts set, but we could be at the live stream tomorrow morning and be at 35.50, given these markets. But that's the thing I'm watching for, the bullish side. And you do have two tops up here in the vicinity, and then a close above today's high would be a rally back into the rotation zone, as we've talked about before. I would not recommend trying, though, to call a bottom without a stronger pattern. Just and go, oh, I just think I'll buy this. This is not the market you just want to randomly buy without a pattern. It's a group thing. Imagine this. There is no they. There's the bigger players on Wall Street. But think about this. Just think about this from a let's say you got short. Let's say you are more a short, not a day trader, but all right, you're shorting this on a breakdown. Where's your stop going to most likely be? Well, most people are going to keep it on the other side of this little horizontal channel or somewhere up near here. They're not going to keep it right here unless they're micro day traders. All right, let's say you're going for a bigger move push down. Now, what happens if you get short on a break and then it goes to the other side? The more the people who got short on this break, their stops are up here. That's why the pattern works. So what happens? You're short. You come up here. You start triggering in the stop areas. It starts breaking out the other side. Now, what about the people who are looking to get long? Hey, we're breaking out of the other side of this horizontal channel. The breakdown didn't work. I'm going to start buying longs. More stops from the shorts are getting hit. That's why you get the boomerang effect. It's just the nature of the markets if you think about where stops are placed. I use the double extensions, but not off the highs and lows. I find key points. The highs and lows don't test out because you can get really weird areas. I use significant levels. All right. For example, and don't really go much below 1 hour, or I prefer 1 or 4 hours. So for example, if I was going to use this, you see how that's a significant level? Close, move away, test it with the high, rapid drop, close, spike through, then rapid drop away, spike through, closing at it, rapid move away. That's a significant level. This, you had the low, key close, move away. This went through it, but look where it closed. Right at it was technically not closed yet, but we're not going to move very far. You see how these two levels are both significant? It makes sense? These are some more advanced concepts. So those are the levels that would be used. They test out better. And then I'm going to I like to fine tune them. So my early warning sign for a shake and bake is I use these same levels because this is what I've tested it with. This was a lot of manual testing too. But this 50% area is pretty key. Why? Because that's generally where stops, and a lot of people I know don't use significant levels, but this roughly estimates where to stops start kicking in. Okay? So that's where it starts kicking in, and then if I get acceleration, I can always front run it. But the key thing is when we start breaking above here and I can start getting key closes above here. Why do I want to close? Because rejection, no close above, no close above, no close above. You start getting the close above. Now it can be front run with a close above, but then these are the areas and it's fantastic into a clear path. Why? Because now we don't have a lot of stopping points. There's not a lot to lean on because where's the next logical area? Where's the next logical area beyond here? So if you're going to be putting stops, like, all right, if I'm wrong to the short side, I want to be out. You're either going to be putting stops somewhere in this area, or are you going to put stops just randomly in the middle of this? That doesn't make any sense. What are you leaning against? What are you leaning against? There's no support or resistance. You start getting up to your support or resistance. Here's the 1 hour breakdown. And remember, higher time frames are more important. There's your 1 hour. Your 4 hour is roughly in that same vicinity. So the next logical stops for people with wider stops for the short side aren't till up here. So you have acceleration up into there. Now, does this have to snap back the other way? No. Look, because we've already broken down, this could be a rollover play tomorrow night. That's why you don't just want to try to front run something from down here. That would be idiotic because many times you get the sell off. What would this be already? A return to prior support becoming resistance. And then you roll over. So this is not the snapback play yet. The 50% gives you early warning. The confirmation is on the breakout of the other side. Mike, when people buy ours, does it show up as buying volume? Well, I don't know what buy ours means. Oh, buy puts. When people buy puts, it shows up as the volume in the put market. It doesn't show up. It's not going to show up in the futures market or as registered against the stocks. It's going to show up as volume. Remember, there's option volume and you have call volume and put volume. And you have call open interest and put open interest per strike. So it's going to show up in your options volumes. The only thing related to options that show up in the underlying are natural hedging from options plays. For example, like the market makers who have to hedge off. Now that's going to show up because they hedge off into the underlying for the most part. Yes, you can hedge off into other options should there be issues with the underlying, but you're going to hedge off in the underlying. That's the only thing that has a direct impact on the underlying volume, other than people just trading the underlying. So does that make sense? Don't mix up a volume in the options market and volume in the underlying market. So if I put up the volume here, also remember, I want to point something else out because we don't touch on this all the time. But volume follows trend, not every day, but look at this. What's been happening on this down move? Look at the volume. It's higher than on the general up moves. Compare this downwards and the volume. If you took the average volume, it would be right around in here. Compared on this bounce, look at the average volume if you took it from these 4 bars. It's going to be roughly here. The average volume from the sell-off is a lot higher. Look at the sell days. They're higher volume. So any green is counter trend at this point. That's also where you use volume analysis. Oops. Nasdaq. Oh, let me just take a look back to the. Still keep it. We don't have some great pausing bars here. So I still have to keep it roughly here at this significant level. If you're wondering, since these are the pausing bars we really have to utilize, and since it is a significant level, I'm a little more comfortable. So on the push downs, 36.22 minor level, more significant is at 35.87. And then the remember next levels is 35.56. Bounce mode, besides, look at also with this, with the shake and bake, look at where the target is. It just so happens. Look where it is. It comes in with a daily rotation zone. Does that mean it's higher probability? No, but I don't like when targets go into the rotation zone by very much, because we could snap back to the rotation zone and roll over again. But that's a really nice, and that was done with the significant levels. So it's just nice to see confirmation. I'm not going to do this on all the markets, but they're pretty much trading the same. We'll take those off for now. You know, for your Nasdaq, if you wanted to learn the significant level stuff, now also your Nasdaq, you see how this isn't as strong a pattern because you don't have a strong clear path. Remember the S&P? Sorry, it's something weird's going on with my mouse again. So remember the S&P? Clear path, and here's the next key breakdown area. Compare that to the Nasdaq. Look, you break out of here. Now, let me just put up the other side of these. There's a significant level right there. Don't go off the lows, too many people. This is a great concept to utilize. Don't go off lows. Find key areas of significance within the pattern. So that would be the significant level to the downside. That would be to the upside. But you see on a break above here, what's this? There's a stopping point right there. And then, so this isn't as strong a pattern as the S&P. Not necessarily. Not necessarily. I told you what I was watching for. Now, if we get a, and you don't always have to have a lot. Short interest is dwindling more rapidly. And there are shorts, but to get a short squeeze is a specific set of criteria. All right. So the key level, the upside I'm watching is roughly 11.5 on the Nasdaq. To the downside, we still have a decent pausing bar here. I don't have to, and that's from the reverse harmonics, which I have to bump up. So if we start breaking down, my next level is 11,144. 144. And then I'm at 11,009. Remember, 11,068 is the key low. This has not retested the lows back from June yet. Dow, not going to sit and harp on all these right now. Same virtual shake. This is a very similar pattern to the S&P. So you're trading below your key, or right at your key resistance right now. So that would be the pattern. The key level is this 29, roughly 29.6. To the downside, I got to lower this. We have the stronger pausing bar here. which gives me a cluster now. If we do push below today's lows, 28,725 to 28,750. Then you're below that's 28.5 is the next key level down. Russell, you can do these essentially the same things below. If we break down 1640 is the next key level. And then below that, the next major level is not till 1591. DAX, we're closing in at 11,966 harmonic. But if you look with the DAX, we start breaking below this. The next major area isn't until 11,564. So if we really start with some downward momentum in the DAX, that's the next major area to watch for. And then, yeah, then it gets very interesting with the DAX. I know there's another question with the DAX here. Where was that? There's your SAP. Trading right at some pretty significant support area. You're sitting right here. You got... Oof. This is where I will utilize some lows with a key close. I'm just seeing if there's a key close. Right about there. 77.90. You start getting close below 77.90. Watch out. Now this is pretty friggin' bearish for SAP. So any rallies, I'd be looking for rollover plays to sell. That's just ugly. When's earnings? 25th. So you got a long way off, and you've broken below key support. So again, I'd be looking for any rallies to sell. Even the most recent stuff, your major resistance is about 87 if it can even get that high. Ugly. Nothing I'd be... There's no great bottoming pattern yet either. So nothing I'd be doing from the long side yet. Notes. Yeah, I mean, this is brutal. Every little rally attempt in the notes just keeps getting sold. No decent pausing bar just yet. You can't even do some minor harmonics on that. But this is starting to get painful. So I'm just, from the long position, stand aside. Shorts is just ratcheting down stops. Dollar index. Talked about this at lunch. Coming to retest the area. Remember, the first and second targets were the high probability ones because the third one extends above the wicks and above the candle bodies. But the dollar index holding up. The only thing that also from a dollar perspective that can provide relief is if the dollar really starts breaking below about 112.95. And that's the only thing I'm watching to really start sustaining more of a market rally also. VIX finally hit that 87.5 after the close above that 62.5. So we're getting some pullback, but that double is off the table. We don't have a strong topping pattern just yet, but it's returned to key support. So that's what I will be utilizing. One of the levels I'll be utilizing tomorrow. Crude. There's just nothing yet from the long side that's decent. Natty gas. Nothing from the long side that's decent. Yeah, you might now have this potential double we can watch for. but nothing that's triggered yet. And that would just be a potential rally back to about 77 or 770. And that might never manifest. If we do break below this 200 on a closing basis, I mean, we should still, the probability still favor lower prices. There's not a lot to be done with our natural gas with the situation in Europe also. Let's get to Bitcoin rolled over. Again, you want Ethereum? I know somebody asked for Ethereum. Ethereum, we're still... Any rallies are to be sold in this still. Still read targets 1200 and then 1083, and then a return to the lows, or what I'm watching for. Only thing that would change at this point is a key close above about 1555. Other than that, still from the short side. What else do we have? See, there's just not, this is not a lot. Let me just peek in at Tesla. Not quite the full, did that fill the full gap? I don't think it did. When I looked earlier, 288.67. No, 288. Oh, yes, it did. Yes, it did. Actually, I didn't check on it after that. It did fill the full gap there. So that's off the table. There's just nothing going on there either just yet. Watching for the next breakdown play. Everything else will just be short-term patterns. Dark screen sleep. You're back with Bing. Nothing. I don't know what you're hoping for. If you get the bounce play, right now it's above 191. You're looking at 215 area still. 215 to 225 is the first target area if it can break out. Otherwise, you're just waiting on some kind of squeeze play, which may never materialize again. Yeah, it cycles at the bottom. It's oversold, but it bounces. You know, you bounce up here. It's just going to be another sell pattern unless it can get some kind of squeeze play. But overall, you're just hoping for something. I don't know what else to tell you. Where do I, on Twitter? That's where I have my harmonics. From the lows on July 11th and the highs on April 5th. That's where I have the harmonics. And it's a story. This is going to get jammed down Elon's throat. So it's just a matter of time. So I'm just focusing. If there is a play, it has to be to the upside, but it's it's going to still trade day to day because it's a story stock. That's what I'm saying. Support for SAP. How can it keep dropping? What do you mean? How can it keep dropping? A lot of stocks can keep dropping. We're not at a long-term bottom yet. Even if we get a short-term bounce move, even if we got a capitulation move, it would not be a long-term bottom generally. It would not be the long-term capitulation move. It would be a potential short-term capitulation move. So how can stocks keep dropping? Because things aren't getting better from a macro perspective. Valuations still aren't there. You have a lot of selling pressure, and we haven't even got to the unwind principle yet. Euro USD, and this is not a pretty chart. Even if you get, yes, this can still be traded as a double, but look at this. Even if you do get a rally, even if you get this double to play out, look, it doesn't even take you back at this point to parity. It's, that's the funny thing. You're so far below the breakdown zone now, and we just have short-term potential trades into the daily rotation zone. I mean, I wouldn't be surprised to see this hit the 93.50 area. Again, Tesla, unless you're micro trading at the key level, right now it's an overall macro horizontal channel. The breakdown play for me is below 265. If we get crazy move, you need to get a close above 315 at this point for any breakout play. Other than that, it's just something short term in here, which not interested in. Until robot days out of the way. And we got earnings coming up the 19th, but I'm still watching for the breakdown play. Oh, geez. Can somebody report this? I start talking about Tesla. Look what we get. Look what we get. Hood puts. Right now, since Hood can be a stupid short play to the upside, I wouldn't be trading puts until we broke back on a closing basis back below 9, personally. Or unless we rally. Now, if we rally back on a silly rally, if this Nasdaq gets going, we rally back into the 11 area, I'd consider putting on a bearish position up here. I would not be putting on a bearish position here unless we started breaking down below that $9 mark, for me personally. You will see Hood return to $7 at least at some point once we get the next breakdown play. Thank you, Ted. It's always Elon's fault. What is Elon's fault? Don't get me started on Elon. Thanks for the tip on URA. Finally got a good entry. By the way, did anybody watch? And that was the buy entry on here for an. Remember, on these, do not get greedy on these. So know where your bounce play is. I'd still recommend trading this around a core position until we get something. So I don't know how you're trading it, but for me, especially on a potential gap fill, that's a gap fill to back to 29 would be a key area to watch to unwind. I do gap analysis along with zero line per week, and Wednesdays is statistically bull days. Well, we'll see. We'll see if we get a bull day tomorrow, won't we? Which time zone are you in? You got to cite a time zone for me. And we'll see. I mean, I'd have to do some research on it from this year. I have not done that. So I cannot comment. Eastern. So you're buying the overnight, which generally when you do get the rallies, remember, buying on a closing basis on the S&P and taking it off by European close, which is 11 Central, which is roughly what you're saying, has been for many years better than buying the U.S. Open and selling on the U.S. close. It's tested out way more favorably. Buying the U.S. close and selling the European Open you're capturing a fair amount of bull market gains versus buying the US open, selling the US close. Do keep that in mind. What does that tell you? You generally get an upward bias in the overnight session, especially the European session. Now, that could be shifting, but that is something that many people have tested out. Sure, send it to me. Buying the US close, selling the European close. I should say selling the European close. If I said open, I didn't mean that. It's buying the US close, or you can essentially buy the US open for futures because the close is at 4 Central, the open's at 5 Central PM. You can get slight gaps. There's a variation, but if you just want to wait, you buy the US futures open at 5 p.m. Central Time, 6 p.m. Eastern Time, the futures open. And then selling it on the European market close, which is right around 11 Central the next day, is way more beneficial than buying the US open, selling the US close. So, and yes, you can play that on stuff like the spiders too, if you're just trading the stocks. Now, it's much more powerful in a bull market. But you'd be buying the spiders. You could always buy it in the after hours session, but you'd be buying the spiders going into the daily close at 3 p.m. Central and then selling that same 11 a.m. Central midday. You'd be selling the spiders out then. So that's your little, if you want to play with that, especially in bull market conditions. We're not in bull market conditions now. But when we do enter a new bull market, if that has held up for years. If you want to play something, that's something to investigate or do some more testing on once we're back in a bull market, should it start holding up again. All right, everyone, it's been a long day. I'm going to call it an evening, take the dogs out for a walk. I appreciate everybody new here who is tuning in. If you haven't subscribed yet and you like what we're doing here, sorry Bob was not on, but you know what? Can't control the hurricanes. I will be back in the chair tomorrow morning, 8. Well, the countdown starts at 8 Central. And we got lots more Fed speakies. Yay. Thanks, George. Thanks, Jacob. Yeah, please come back and drop a comment. It helps us with the algorithm. And if you like what we do, like the video. I will see everybody tomorrow. Bye for now.